Let us do Classwork 1. It was adapted from DBE June 2017. We will be doing the financial statements. And for 1.1, we need to match concept in column A with the description in column B. Write only the correct letter. And what we have in the answer book, it's basically the numbers. And we just need to write whatever matches 1.1. Um, and you just write the letter, which is the description that matches the concept that is in 1.1 up to 1.1.8. Normally, when I do this, I will read through all my descriptions so that when I start reading the concept, it's easy for me to identify which description matches that concept. So the first concept is the income statement. You know, the income statement is a statement that shows your profit or loss. It's basically showing your income that you have earned minus all your expenses. So it's all about profitability. It's about the performance of the business in a specific or identified financial year. It can be A, which is analysis of financial position of the business. That is the statement of financial position. Remaining value of an asset, that is a residual value. Finance cost, its interest expense. When classifying a transaction, the seriousness or impact on the profits must be considered. That will be materiality. This principle makes it possible to compare financial results of different businesses. That is GAAP principles, shows the profitability of the business. That will be F. So 1.1 will be F. 1.1.2, as I've said, will be E. And depreciation is an imputed expense, so that will be G. Principle of materiality, that will be D. Balance sheet, that will be A. Matching principle, income earned and expenses incurred must be shown for the same financial year. So matching principle will be H. Interest will be a finance cost. The residual value, finance cost was C. Residual value will be B, right? Um, and that's how you will basically match column A with column B. And yeah, that is it. Easy, right? All right. Let us move on to these to start answering the statement of profit or loss. I'm going to start with the nominal account section. So I've got sales, cost of sales, debtors allowances. What I'm going to do there is simply record them as they are. So I will go to my sales and minus debtors allowances, cost of sales. I'll keep it as it is, and that will be it for now. Let me see if there's anything I can record. At the bottom, they've got interest on current account and interest on fixed deposit. Those will go to the bottom of your statement of profit or loss. We're gonna record them as interest income. Okay. So it will be interest, it will be made up of interest on fixed deposit and interest on current account. Which was that 847. So those ones will not be recorded under income. Now let's just record all our expenses. Salaries and wages, bad debts, rent expense, advertising, water and electricity, packing material, bank charges, insurance. All of those will be recorded under operating expenses. Okay. So we'll record all of those under operating expenses. You just open the bracket and write the value. All right. And the last one was insurance. So I'll stop immediately when I see insurance. And yeah, that'll be it. Okay. Once I've recorded everything, then I'm just gonna go back and the nominal account section to see if I left anything out. And from the look of things, I did not leave anything out. Let us go to the first transaction. It says on the 28th of February 2018, T-Chance data returned damaged goods. The selling price was 850 and the markup was 25% on cost. The goods were immediately sent to the supplier who issued a credit note. No entries have been made in the books. I will start with that 850. The 850 qualifies to be debtors allowances. That is because the debtor returned goods. Debtors allowances reduces sales. So I will take that 850 subtracted from sales. At the same time, it reduces what the debtor owes us. We will therefore subtract that 850 from trade debtors. Trade debtors balance as per the pre-adjustment trial balance. I'm going to look for trade debtors control, which is 63,190. That will go to trade and other receivables. From that 63,190, I will subtract the 850. But when goods are returned, 4 accounts are affected. I've only done 2. The other 2 accounts, I can't really record any of them unless I find the cost price of that 850. We were given the markup. So to get the cost price of 850, I will take that 850 multiplied by 100 and the markup was 25. So I'll divide that by 125. It is always 100 divided by 100 plus the markup. 850 multiplied by 100 divided by 125, it will give us 680. This 680 represents the cost price of goods that were returned to us. It'll therefore increase our trading stock, but at the same time, it will decrease our trading stock because these goods were immediately sent back to the supplier as they were damaged. So we will add that 680 and then subtract it because it was returned to the supplier. When it's returned to the supplier, it will affect trade and other payables. So for trade and other payables, you will look for creditors control in your pre-adjustment trial balance. Your creditors control is 48,000. From that 48,000, actually I'm lying, it is 197,000. From that 197,000, we are going to subtract the 680, which is the cost price of goods that were returned back to the creditor. So in our creditors control, we will simply take that 197,000 and subtract the 680. We are basically done with that transaction. I was wondering why I closed it so quickly. It is because of number 2, where they say trading stock on hand as per physical stock taking on the 28th of February 2019 amounted to 698,900. I am going to take 698,900 and compare it to the balance that I've just calculated, which is 697,400. Remember, the one that is counted is the accurate one. So the one that is in the pre-adjustment trial balance that we have just adjusted, by the way, will have to be adjusted up. And when we adjust it up, that upward amount that we need to adjust it by is trading stock surplus. So 1,500 will be our trading stock surplus. Meaning what we have in our records of 697,400, it was incorrect. It was supposed to be 698,900. So the increase in your asset results in income. That 1,500, we are going to record it under operating income. Let me just calculate sales and calculate cost of sales and then calculate my gross profit. We will record it under other operating income as trading stock surplus. Remember to show workings in brackets. You will get marks for that. And your income will be 1,500. The same amount that was counted, we are going to record it in our inventory note as trading stock. Only stock counted will be recorded in the inventory note. Number 3, packing material to the value of 15,700 was used during the financial year or during the year. The used packing material will be recorded as an expense. We will record it under operating expenses as an expense. Let's find out. You'll realize that our packing material in our statement of profit or loss has been recorded as 16,070. That 16,070 represents packing materials that we purchased for the year. But of that 16,070, we've only used 15,700, meaning that the unused packing material will be the 16,070 minus the 15,700. The unused will be 370. The unused will be deducted from your packing material so that we only expense the used, which is 15,700. That 370 qualifies to be packing materials on hand, but we normally call it consumable stores on hand, which is an asset, and it will be recorded under the inventory note as consumable stores on hand. 370. You can basically just total that up, which will be 699,270. You will actually put that under current assets as inventory, and then you put it there as 699,270. But we'll get to that later on. Let's move on. The insolvent estate of Payne paid out 40 cents in the rands and transferred 360 directly into the bank account of the business on the 5th of December 2018. This has been recorded. So the 370 has been recorded. The rest of his outstanding balance must be written off, and the provision for bad debts must be adjusted to 3,090. I'll come to the provision later on. For now, I will deal with the rest of his outstanding balance must be written off. If we received 40 cents, it means that we did not receive 60 cents. So we received 360, which is the 40 cents. The amount not received should be the 60 cents, which we don't have. Now, to calculate what we did not receive, we will take the amount of 360 multiplied by 60 and divided by 40. 60 is what we want, 40 is what we've got. This will give us 540. That 540 must be added to bad debts expense and subtracted from trade debtors. So the 540 will be added to bad debts expense, which is an expense under operating expenses. You will add the 540, which is what we are writing off as bad debts. It increases our expense bad debts. In total, our bad debts for this year will be 3,330. But that 540 will also reduce our trade debtors, as one debtor will no longer be owing us as we are writing them off. Remember, in grade 10, when you write off a debtor, you debit bad debts, which is an expense. That's why we increased our bad debts by 540. You credit the name of the debtor, meaning the debtor will owe us less, and then you credited debtors control. That's why here we're crediting debtors control, and that is because it will reduce the overall amount that is owed to us by debtors. Now they say provision for bad debts must be adjusted to 3,090. There's no need for us to calculate provision for bad debts here. It has been given to us. I am going to compare this provision that was calculated in the current year to the provision that was calculated in the previous year, which was 3,450. You'll realize that last year's provision was greater than this year's provision, meaning that our provision for bad debts has gone down. Remember, provision for bad debts is an estimate of future bad debts. So we want it to go down. What we know is that the provision for bad debts that was in the trial balance was 3,450. It is 3,450. Then you're going to minus the 3,090. You'll notice the one in the trial balance has to go down to that 3,090, which will result in income. And the income will be 3,450 minus 3,090, which will be 360. We are adjusting it down. Adjustment down is recorded as income. When we adjust down provision, bad debts, that adjustment will be income, and it will be recorded under other operating income as provision for bad debts adjustment. It will be 360. This final provision of 3,090 must be recorded in trade and other receivables as provision for bad debts. Only the one that is calculated will be recorded as provision for bad debts, and you put it in brackets. Then calculate your net trade debtors. Okay, I'll come to net trade debtors. It looks like we have an extra thing that I missed. It says a debtor with a credit balance of 11,700 is to be transferred to the creditor's ledger. Here I have to explain the story. We are dealing with the debtor's ledger, which is DL. The debtors ledger has the debit, it also has the credit, then it has the balance. According to this, it says that the debtors ledger has a negative balance of 11,700. Please note that this violates the accounting rule. We can't have a debtor who has a negative balance. As if a debtor has a negative balance, it means they're owing us a negative value. In essence, they are not owing us, we are owing them. And when we owe them, it violates the accounting definition of what a debtor is. Because immediately we owe that debtor, they are no longer a debtor to us. Instead, they are a creditor. So to cancel this negative, because we can't have a negative balance in the debtor's ledger, we are going to put it on the debit side. Then the negative and the negative will cancel out, so the debtor will end up owing us 0. So, by so doing, it means we need to go to our trade and other receivables and add that 11,700. Obviously, I'll just calculate my trade debtors balance and then take my trade debtors, which is 73,500 minus the 3,090 to get my net trade debtors. Where's this going? Excuse me, which will be 70,410. Okay. I'm gonna go back to what I did in the debtors ledger, which is here. This was the debtors ledger. We are done with the debtors ledger, right? We agree that this person is no longer a debtor, is now a creditor, right? Now, since they are a creditor, we are going to record them in the creditors ledger. That 11,700 will be on the credit side of the creditors ledger, meaning that we owe this creditor 11,700. So this 11,700, we need to record it in trade and other payables by adding it there. It'll be 11,700. Got it? Awesome. Number 6. One employee was erroneously left out of the salaries journal for February. Left out. So that means we need to add them back. The details of his pay slip were as follows. They gave us the net salary as well as deductions. One employee was erroneously left out of the salaries journal for February. The details from his salaries pay slip were also as follows. They are giving us what the business has contributed, what we have contributed to this employee. Pension will be 10.5% of gross salary. UIF will be rent for rent. So whatever they contributed will contribute the same thing. Then they say all contributions are debited to salaries and wages. It means that we will not have a separate account with all the contributions. So all the contributions will be added to salaries and wages. Normally, to salaries and wages, we only add gross salary. Remember, gross salary minus the deductions will give us a net salary. So if I'm given a net salary and I want gross salary, I'll just say gross salary will be your net salary plus all your deductions. Let's find our gross salary here. It will be 18,375 plus 4,500 plus 1,875 plus 250. Our gross salary will be 25,000. What do we do with that 25,000? That 25,000 will be added to salaries and wages. Salaries and wages, we find them under operating expenses. And that's it. There's nothing else we can do. The net salary, though, which was given to us, will be recorded in trade and other payables. I need you to understand that the only expense from salaries and wages will be the gross salary plus employer's contributions. I noticed that the employer only contributed towards the pension and the UIF. We need to find those contributions. So since we have a gross salary of 25,000, pension contribution will be 10.5% of 25,000. It'll be 2,625. That 2,625 must be included in salaries and wages in the absence of a separate account. We are going to add it to salaries and wages. When we add it to salaries and wages, we are simply saying this is our total expense for employing this person. But we don't just add the pension contribution, we also add the UIF contribution, of which they said it's rent for rent basis. You will have noticed that the employee contributed 250. So we will also contribute 250. And this will give us our total salaries, which will be 315,965. The net salary, as I've just said, will be recorded in trade and other payables. The net salary is called creditors for salaries. We already had a balance for creditors for salaries from the pre-adjustment trial balance, which was 48,000. To this, we will add the net salary of 18,375. Then we're going to go to pension. Pension, we already had a balance for pension from the pre-adjustment trial balance again, which was 6,500. We are going to add the pension that was a deduction from the employee's salary and then add the contribution, which was that 2,650, and then add, I said to take this one, add the deduction and add the contribution as. That's it. So it will be made up of this balance of 6,500. You add 2,625, which is the contribution by the employer. And then you add 1,875, which was the deduction from the employee's salary. This will give you what is owed to the pension fund. I see I added to a creditor's control already. Okay. The only deduction that we have not considered is pay as you earn. The employer did not contribute. And I'm going to check here if we do have sales pay as you earn, which is 12,000. So you're going to take this 12,000 and add it with the pay as you earn that was deducted from the employee's salary. And that will give you sales pay as you earn. In total, it'll be 16,500. It looks like we're done. Moving right along. Rent expense was increased by 10% on the 1st of February 2019. The rent for March 2019 has already been paid. Please note that our financial year end is the 28th of February 2019. And here they're telling us that we receive rent for March 2019. March 2019 falls into the next financial year. For this one, you need to draw the timeline. Your timeline will start at the beginning of the year, which is this one we need to draw the timeline. And our timeline will start on the 1st of March 2018 and run all the way to the 28th of February 2019, as well as March. Will include March because rent for March was included. They said rent was increased on the 1st of February. So I will draw a line between February and March, which was received. So we know that 1 month falls outside the financial year. So how much was rent all this time? Well, we don't know. We know that all we know is that it was X in March, and then it was X in April, May, June, July, August, September, October, November, December, January. That is 11 months. It was X for 11 months. But after February, it was increased by 10%. So it'll be X multiplied by 110%. Okay, 110%, which is the same as 1.1x. All right, it will increase by 110%. But for how long? For only 2 months. Okay. So when you write this as an equation, it'll be 11x plus 2 times x times 110. 110 times 2 will give you 2.2. That must give you 63,360, which is the total amount of rent that was paid. Okay, that is the total amount of rent that was paid. Now you will simply take 11 added with 2.2x, and that'll give you 13.2. Then you divide both sides by 13.2. It'll give you rent per month. But the rent for March, which is the next year, must be increased by 110%, by 10 to be precise. So you will take that 4,800 multiplied by 110%. It'll give you 5,280. To explain what I did here, I wrote this. So rent incurred must be recorded in the statement of profit or loss. We need to deduct rent paid in advance. Rent paid in advance is a current asset and will only be recognized as an expense in the upcoming financial year. Rent prepaid is 5,280 as we paid rent for 13 months. Only rent for the current financial year must be recognized as an expense. We are going to go to our statement of profit or loss and then deduct that 5,280 from our rent expense and then record it as a prepaid expense in trade and other receivables. Let's move on. The total depreciation for the year amounted to 83,200. For us to record this, I will record it in the statement of profit or loss as depreciation under operating expenses and then take it to the tangible asset note. We only have totals, so I'm just going to have with totals only. I'm going to work with totals only. That is because we were only given totals. So we have cost at the beginning, which is the cost of all our assets, which will be 8,138,600. Add all your accumulated depreciation will be 600,000. Carrying values at the beginning of the year will be 7,538,600. Depreciation will be 83,200, and you leave it there. Well, they said nothing about the asset being sold or purchased, so I'm just going to finish this off. The movement will be 83,200. At the end, our total assets will be 8,138,600. That is because we do not buy any asset. Then we're going to decrease it by accumulated depreciation of 683,200. To get that 683,200, we took the 600,000 at the beginning of the year, we added it with the current year depreciation. So our carrying value at the end of the year will be 7,455,400, of which we will take straight to the statement of financial position and record it as tangible assets at carrying value. We did inventory earlier on, and I said you were supposed to record it here as well. Then they say water and electricity account for February has not been paid. So this 11,000 is for February. February is within the current financial year. That is accrued expense. We are firstly going to increase our water and electricity expense since the February amount was not included. Water and electricity will increase by 11,000 Rand, and the total water and electricity will be 83,000. But 11,000 Rand, we are going to record it in trade and other payables as your accrued expense. Um, I see pension here. I see SARS, pay as you earn. I don't see UIF. Sorry, guys, for going back to this. Um, There was UIF of 250 times 2, including the contribution. And then we're going to add it with, we have UIF here of 1,500. I don't know how I left that out. We're going to record all of that in trade and other payables. So you will add those up. Sorry for going back to that. And then we're going to record our accrued expense. And our accrued expense will be that 11,000 Rand. Then they say the bank statement from FNB reflected the following: interest on overdraft and bank charges. So bank charges will increase by 670. Interest on overdraft is interest expense. It'll also increase by okay, I'm gonna go back to it and just read it carefully. interest on overdraft, which is 315. So that is your interest expense. We included it under interest expense. There it is. And then we added our interest expense that we calculated, which was the interest on loan. It'll give us our total interest expense of 89,915. I don't know why I added it with interest on loan. I could have shown it separately as interest on overdraft. So our interest expense in total will be the interest on overdraft of 315 plus 89,600. Please note that interest on overdraft is interest expense, since interest on a liability is interest expense. It means also that your overdraft is a liability and interest on overdraft will be an expense. In total, you're going to put it in brackets as 89,915. I'm going to come back to this 89,000. I just wanted to record the entire thing first. They said here in the third point in number 10 that S. Sibanyoni, who was previously written off as irrecoverable, decided to pay us back. So that 3,600, we're going to record it as bad debts recovered under operating income. That's it. Doesn't affect any debtors control. But since we're done with operating income, might as well add them up. In total, they will give us 5,600 and, 416. Now, coming back to interest, and I want to explain it thoroughly here. We received a loan statement from Nedbank on the 28th of February 2019, which reflected the following. They gave us the balance at the beginning of the year, they gave us repayments, and they gave us the balance at the end of the year. And they also told us that interest for the year must be capitalized. They did not mention anything about repayment that will be made annually or the following year. So we will not have the current portion of the loan here. They just said total payments during the year amounted to 103,200. They didn't say it's annual, it's happening every year. To record our interest, you have to draw a table. I hope you remember the table. You start with the balance at the beginning of the year. If you have any additional loans, you'll put them there, and then you'll have your repayments. You'll also have your interest, which we didn't have, and then they give you the balance at the end. So to get the interest amount, you will take the balance at the end, add your repayments, and then minus balance at the beginning. It'll give you your interest expense, which will be 89,600. Hence that 89,600, I'm going to get back to it. I recorded it in trade. Well, we recorded it in interest expense. Just want to go back a little bit. So your interest expense was made up of your interest on overdraft, which was 315. Now we are going to add the 89,600, and our total interest expense will be 89,915. We are going to record it under profit before interest expense, and we record it as interest expense, and then put it in brackets since it's an expense. Okay? That's it. Then they say the following payments made to suppliers had not been processed by the bank on the 28th of February 2019. This is my second time seeing bank because they also spoke about the bank statement here, reflecting the following. Interest on overdraft will decrease our bank. Bank charges will decrease our bank balance. And the money that was received from a debtor that was written off will actually increase our bank. I want to check what type of balance do we have. When you look at your bank balance, it is not on the debit side. Instead, it is on the credit side. Interesting. The fact that your bank balance is on the credit side, it means that we have a bank overdraft. Now, your bank overdraft is a liability. It will be increased by money going out and it will be decreased by money coming in. What do I mean by this? Bank overdraft is recorded on the face of your statement of financial position. We're going to record it under current liabilities. So you will write it right there as bank overdraft. And I will come back to the rest of it. Okay, I will come back to the rest of it. I just wanted you to pay attention to the fact that we don't have a positive bank balance. Instead, we have a bank overdraft. And I will come back to it shortly. Okay. What brought my attention to that is that we made these payments, so they will also affect our bank overdraft. Remember, I said bank overdraft will be increased by money going out. These payments went out, so they will increase our bank overdraft. We'll come to it later on. Okay. But these payments were made to the supplier and were not processed. Now, to process one part of it, I'm going to go to trade and other payables, and I will subtract those two payments since they were made to the supplier. Now, since they told us that these payments were made, and you might have noticed that I highlighted that these payments were made to the supplier, but they were not processed by the bank. So when we made these payments, we recorded them in the cash payments journal, which will reduce our creditors' control and reduce our bank or increase the bank overdraft, as I specify that money going out increases our bank overdraft. It decreases a positive balance, but it increases a negative balance. These payments, though, we processed them, but the bank did not process them. So there's a mismatch there. Unfortunately, we have to do what the bank has done because it means money has not left our bank account yet. So we are going to reverse what we've done by increasing our creditors' control with those two amounts because money was not paid into the creditor's bank account. So we still owe them those two amounts. At the same time, we're going to go to our bank overdraft and decrease it by those two amounts as though money is coming in. So we cancel the payments in the CRJ. I hope you will remember this from grade 9. The payments not honored by the bank will be cancelled in the CRJ. We made the payments, so we cancel them in the CRJ. If we received the payments and they were not honored by the bank, we will cancel them in the CPJ. Okay, but here we're talking about us making these two payments. They increased our bank overdraft, they decreased our creditors, but the bank did not process them. So we need to add them back into our creditors control, and we also need to subtract them from our bank overdraft. If we had a positive bank balance, we are going to add them to our positive bank balance. But I said I will discuss the bank overdraft later on. I just want to deal with everything, but I want you to pay attention to amounts that will affect our bank overdraft. We good? Great. Let us move on to the next transaction. An insurance amount includes an annual insurance premium of 24,900, which was paid on the 1st of November 2018. Here you need your financial year, which starts on the 1st of March 2018 and ends on the 28th of Feb 2019. We made this payment on the 1st of November 2018, and it was an annual payment. So it'll cover us until the 31st of October 2019, which is a year. You will notice that of this insurance payment we made, 8 months fall outside the financial year. This insurance was paid for 12 months, including those months in green, which is the 4 months that fall within the current financial year. That will be November, December, January, February. The ones in green, the 4 months, have been correctly included, so we don't need to worry about that. The problem is the 8 months that fall outside the financial year. They have already been included, and they were not supposed to be included because they were for the next financial year. To take them out, we need to take the payment that was made for these 12 months, which is 24,900, multiplied by 8 divided by 12. It'll give us 16,600. That 16,600 is what we call a prepaid expense. We are going to go to our insurance expense and reduce it by that 16,600. And then record that 16,600 in trade and other receivables as a prepaid expense. Got it? Good. Moving on. On the 1st of March, this is about shares and dividends. On the 1st of March 2018, 50% of authorized share capital was in issue. Okay, let's record it then. Authorized share capital was how much? We are not told here. Actually, we are not told. We are not told. Let me move on. Then they say on the 30th of June 2018, the entity declared interim dividends of 35 cents per share. No entry was made. On the 1st of November 2018, 160,000 shares were issued at 11 Rand 51 cents per share. Okay. And then they said on the 19th of February 2019, the company repurchased 50,000 shares from the estate of Esitole. It was decided to offer to purchase 16 per share, 16 rand per share. The offer was accepted by the estate of Esitole, and the money was paid from the bank account of the company. Then they say declared final dividends amounting to 45 cents per share at year end, as it only does qualify for final dividends. All this information will only be recorded in your ordinary share capital note as well as your retained income note. As they've said here, 50% of authorized share capital was issued. For you to determine the number of shares that were issued at the beginning of the year, you need to be given authorized share capital. But because authorized share capital was not given, as I've said, I'm going to move on. So I will leave a line for my opening balance because I don't know how much it is. Put a question mark. I will record the 160,000 shares that were issued on the 1st of November for 11 Rand 51 cents. Record them and calculate my share capital, which will be 160,000 multiplied by 11.51 cents. It'll give me 1,841,600. And then they said we bought back 50,000 shares, right? On 19 February 2019, the company repurchased 50,000 ordinary shares. So I will put them in brackets here. But now I'm going to struggle to get my APPS. So I won't get the capital amount for that. They did not say these transactions were not recorded. And since they said nothing, we know that they've been recorded already. I'm going to go to my retained, not retained, but ordinary share capital amount at the beginning, which was given to us as 350,000 shares, and the share capital was 5,425,000. Those 350,000 shares will be the balance at the end of the year, which is the 28th of February, 2019. So everything that has happened has already been recorded since they said nothing. So number of shares at the end of the year will be 350,000. Share capital at the end of the year will be that 5 million. Before I get to the 5 million, I worked out number of shares at the beginning by taking this 350, adding the 50,000 minus the 160. At the beginning of the year, I've got 240,000 shares. Another mark for that. For me to calculate authorized, because they said 50% of authorized shares were in issue at the beginning of the year, you just take the 240, you multiply it by 2. It'll give you that 480. Our share capital at the end of the year will be 5,425,000. We've got the share capital at the end of the year. We've got the number of shares at the end of the year. And the last transaction was the buyback. So I'm going to take the share capital at the end of the year divided by the number of shares issued at the end of the year. It'll give me my apps. Those apps will be the same as the average price per share when the shares were bought back. But this only works out if the last transaction was the buyback of shares. Obviously, it'll give me apps of 15,5. Multiplied by 50,000, it'll give you 775,000. This represents the money that we received when we issued shares. To work out the share capital at the beginning of the year, you will take share capital at the end, add the buyback, minus the ones that were issued. It'll give you a share capital of 4,358,400. Please note that the buyback of shares affects retained income. These shares were bought back at 16 Rand per share. We received 15 Rand 50 for them, and then we paid 16 Rand. So we made a loss. That loss will be recorded in our retained income note as loss due to buyback, which will be 25,000. To finish this off, I'm going to go to my dividends. They said we paid interim dividends on the 30th of June 2018, and we paid 35 cents per share. 30th of June was before we issued new shares. So our interim dividends will be calculated on the number of shares that were in issue when those dividends were declared, which is the 240,000. Take it, multiplied by 35 cents, it will give you your interim dividends. Just to explain the buyback of shares, in case you're wondering where I got the 25,000 from. Next in line, I'm going to focus on the final dividends. They said we declared final dividends amounting to 45 cents per share. At the end of the year, Assetole does not qualify for final dividends. I'm going to go again to my ordinary share capital. So if Assetole is the person from whom we bought back the shares. When they say it does not qualify, it means that when we calculate the number of shares issued at the end of the year, we need to exclude their shares. They do not qualify. Already they've been excluded from the 350,000. So we're going to take oh no, I'm wrong there. They said does qualify. So since they say does qualify, we can't take the 350,000. We need to add back the 50,000. Because Assetole does qualify for final dividends. 350 plus 50,000 gives you 400,000. So our final dividends will be calculated on 400,000 multiplied by 45 cents, and that will give us 180,000. Add your interim and your final, they'll give you total dividends, which will be 264,000. The next item that needs to go to retained income will be your net profits. For me to figure out what my net profit is, I need to find out how much tax we have incurred. They say the total provisional payments for the year amounted to 700,000. At the end of the year, the entity owed 20,000 Rand, or was owed 20,000 Rand by SARS. The bookkeeper did not record the provisional payments. He did not know in which journal to record the provisional payments. If we paid 700,000 Rand as provisional payments, please note that it means our income tax was less than 700,000 because we paid more than what we were supposed to pay by 20,000 because we are owed 20,000 by SARS. That only means our income tax for the year was 700,000 minus 20,000. It was basically 680,000. That 20,000 that is owed to us by SARS, we will record it in trade and other receivables as SARS income tax. Then you can add up your trade and other receivables. We'll also come back to it later. We are done with tax. So now you can conclude your statement of profit or loss. Add these two, they will give you gross operating income. Add all your expenses. When you add all your expenses, they will give that. Then take the operating income minus this. It'll give you your gross operating profit of 2,240,520. Add your interest income, you will get profit before interest expense. Subtract your interest expense, you will get profit before tax. Minus your tax, you will get profit after tax, which will be 1,484,452. That amount will be recorded in your retained income as net profit after tax. Now we're left with whether retained income balance was at the beginning of the year or the end of the year. And according to this, it says it was on the 19th of February 2019. Interesting. What happened on the 19th of February? On the 19th of February, the company repurchased. Oh, but they said when it comes to interim dividends, they were not recorded. So if they were recorded, I was going to add interim dividends to the balance that we are given, and then add the loss to get the balance at the beginning of the year. But here I don't have to add interim dividends because they were not recorded. I'm simply going to add the loss, which was 25,000 Rand, to get the balance at the beginning of the year, and then work my way down to get the balance at the end of the year. Taking that 67,228, add your profit after tax minus your loss due to buyback minus your dividends on ordinary shares, it'll give you balance at the end of the year, which will be 1,262,680. This 180,000, please note that it will be recorded in trade and other payables as shareholders for dividends. Then you can find the total. Okay, I've pretty much finished everything here. So I'm just going to take all the totals and record them in the statement of financial position. Under non-current asset, I will take the total from note number 3, which was 7,455,400 relating to tangible assets. Check if I have a fixed deposit in my pre-adjustment trial balance and then put it there. Under current assets, I will have inventory, trade and other receivables, as well as cash and cash equivalent, which will be 0 in this case because we had a bank overdraft, remember. If we had a fixed deposit, we'll put it under non-current assets. Let's check if we have it. invest tech, which was 460. Oh, yes, we do. So we'll put that under tangible assets, which is 460, added with tangible assets or fixed assets at carrying value. It'll give us our non-current assets. When you add your non-current assets with your current assets, it'll give you total assets. That'll be 8,726,960. Under capital and equity, we have under shareholders' equity, we have ordinary share capital. The total of your share capital was 5,425,000. And then I'm going to discuss the bank overdraft. With the bank overdraft, I will look at all the transactions that affected our bank account. Starting here, interest on overdraft, it reduces our bank account if it was positive, but it increases our bank overdraft. Same with the 670. The 3,600 increases our positive bank account, but it reduces the bank overdraft. Those payments that did not go through, we have to add them back into our bank account. But because we don't have a positive balance, they will reduce the bank overdraft. When it comes to the repurchase of shares, they said the money was paid from the bank account of the company. Now, if the money was paid from the bank account of the company, it will reduce our bank account. It'll reduce our bank account by how much though? It will have reduced our bank account by 800,000. But this transaction was already recorded. You got it? It was already recorded. The only thing that was not recorded here was the interim dividends. The interim dividends, we'll find them in trade in your retained income, which was 84,000. It'll normally reduce our bank balance if it was positive. But because we have a bank overdraft, it'll actually increase our bank overdraft. Lastly, we made a payment of 700,000 Rand to SARS. That will normally reduce our bank balance. But because we have a bank overdraft, it will increase our bank overdraft, further putting us into negatives. That's all that affected your bank. Then I will record my retained income as well as my long-term loan from Nedbank, which was 652,000. That's all I had. By the way, that was the closing balance as per the loan statement. If I had a current portion of the loan, I was going to record it there, but I don't have it. Retained income will be recorded as 1,262,680. which is from here. Total equity and liabilities will be the sum of these. Under current liabilities, the only thing I have not recorded is trade and other payables, of which we've just found the total, which was 499,325. This one over here. And for our bank overdraft, we'll have 887,955. Current liabilities will be 1,387,280. To get my total equity and liabilities, I will take it's shareholders' equity, add it with non-current liabilities, add it with current liabilities. That will give me 8,726,960, which must be the same as total assets. If they're not, you made a mistake somewhere. You're in the exam. Do you have time to correct that mistake? The answer is no. Move on. And that will be it with respect to classwork 1. You can try out classwork 2. In classwork 2, you were just asked to calculate or prepare the statement of profit or loss, inventory note, trade and other receivables, ordinary share capital note, as well as your retained income note. That is all. All right. Keep checking, as I will be posting solutions or the video to classwork 2. Please don't forget to subscribe, like, and share with your friends. Don't skip ads. And thank you for watching. Hustle.